Hello viewers, today we are going to continue with our series of management decision and control, and today we are going to look at the different simulations that we have, and as we had said from the previous videos that we are going to look at how we are going to be determining the cost per unit of a product or a service using either ABC system or the traditional system. But we said that as far as MDC is concerned, or performance management is concerned, we are going to focus more on the ABC system since the traditional approach was phased out due to the introduction of advanced technology. So for those who want to see more of the computations, maybe to improve their understanding on the traditional approach, you can check on our cost and management accounting playlist where we did more numbers on that. But basically for MDC, we are going to put more emphasis on the ABC system. So we are going to first use this simulation before we go to the question papers or the past papers for MDC. So without wasting more time, let's try to analyze the question and see what we can do. The question says, suppose BK Limited manufactures 4 products, X, Y, and Z. Then they are saying that output and cost data for the period is as below. They have given us the output and the cost data. They have given us the products. We have a table there which has products W, X, Y, and Z. We have the output in units. We have the number of production runs. We have the material cost per unit. We have the direct labor hours per unit. And down here they are saying, we have a note that the direct labor cost per hour is shillings 5. Overhead costs are as follows. They have provided with us a table showing the details of costs and the amount. We have short run variable costs. That's the amount, 3080. Then we have setup costs. We have expediting and scheduling. We have material handling. We have the total. Then the required says allocate overheads to the products on the basis of traditional costing system. And the other one is we are going to allocate overheads to products on the basis of ABC system. So here we are going to look at both two systems and we see how we can be able to differentiate the two when we are using the computations. But we have other simulations as we are going to see them. Simulation number 2 is coming from March 2021, question 2A, and simulation 3, which comes from June 2016, question 1, part A. We have also trial numbers, but as we said, that we are going to start with class examples or a simple example that will help us get the basics before we dive in the past paper numbers. So without wasting more time, let's try to see how we can be able to compute this question. Let's go to the Excel and see what we can do. So it was BK Limited. They had given us the cost information. For those who need to be seeing the question, you can first pause the video and copy down the question as you go through what we are going to be discussing. So the first was to allocate the overheads, the products on the basis of the traditional costing system. We say the traditional costing system is the same as the absorption costing system. That was part A. So we start with our part A. This is part A. We start with the part A. When you are going to be using, we are allocating overheads on the basis of the traditional costing system. So that's going to be our first number that we are going to handle, and that's part A of the question. So when you are given such a question, which has basically two parts, what we normally encourage is that we start with what they have asked us, then we do the working aside or on the fresh. We put a fresh page for the answer or for the answers that they want us to compute. Then we make sure that we do the workings from a different page. We don't mix or we don't do the computations within the question that had been asked for us. So we can try maybe to put a layout. You can also put it in a table-like format. We have the products. We start with the products. And the products are W, X, Y, and Z. So those are the products that we have. Then we can try to go to the number of units that they have given us. The units we have 10. We have also 10. Then for Y, we have 100. Then for Z, we have also 100. You can try to realign these things so that we can have some of the things centered. Okay, let's proceed. Now we have the amount. The amount in shillings. Whichever currency they have given you is what we use. We have the shillings. We have the shillings. Maybe I can try to zoom in a little bit so that we can be able to see what we are doing. So we start with the costs. We said if we have the direct costs, we first of all have to start with those direct costs, because for them, we have already a basis for allocating them. We can easily trace them from the product. So when you look at the question, they have given us material cost per unit, meaning these are the raw materials that were used in the production of the goods. They have also given us the direct labor hours, but remember, direct labor hours is not a cost. For us, we want the direct labor cost, not the direct labor hours. That's why below we have a note that says direct labor cost per hour is five shillings. That's why we start with our material cost, the direct costs that we have. If these costs were already allocated, we can just take them the way they are. If at all they had given us, because remember, these products, we are computing the number of units in 10, and 100 and 100 for each product. But the cost they have given us, the material cost, they have given us material cost per unit. It means we have to get since we are not computing for only 1 unit, we are computing for the 10. Then you have to compute each product, multiply by the number of units to get the total material cost that was spent on each product. That's why here we are going to be using this number of units. Then at the end of the day, we can first compute the total cost. When we get the total cost, then we shall divide by the number of units to make sure that we be able to get our cost per unit. Because what we are looking at here is a cost per unit for each item, the total cost per unit. But the costs they have given us that to produce 1 unit of W, we incur materials, we incur direct labor. So we want to add all that so that we'll be able to get what we call the total cost per unit of each item. And we shall get that by dividing the total cost, we divide by the number of units. But what we have to do to get the total cost is to sum up all the costs that have been given, whether they are direct or they are indirect. So we start with the direct costs. Direct costs, we have materials. But as I said, the materials they have given us is per unit. But for us, we want for all the units that we are producing, the different products. So we have to need to get a working for that. Create a working, we say it is maybe working 1. We can first of all list everything that we have. We have also the labor. They have given us labor cost. We want the labor cost. Even the labor cost, since we are not given the labor cost per unit, and they have given us the direct labor hours, number of labor hours that we incurred. So we need the work for that. Meaning this one is going to be working 2. Because since they have given us the direct labor hours per unit. But remember, for product, maybe product W, we are having 10 units. It means each unit is requiring 1 hour. But we have the labor cost per hour. So we have to compute the direct labor cost. And the last one will be now the overhead. They have given us the different overheads. The overheads are also going to be in our working, let's call it working 3, because they have told us that the details of the cost, we have those different overheads that were incurred. But the good thing with these overheads, they have given us the total overheads that they are incurred. Meaning, if they are all the total, we need to be able to apportion them, use a basis that is going to help us apportion for each product. So that's why we need a working for that also. So we go to, we first complete with our direct cost. We said it materials. Maybe you can put a workings here. You can have our working. I'm just putting it besides, but what I said is that you put on a fresh page. Have the workings, and working 1, we have our material costs. And our material cost, now we are going to be computing the material cost for each product. We have product W, have product W, we have product X, Y, and Z. Those are the products that we have. So we are going to compute each of them. So they have told us these material costs, we are going to get it by getting the material cost per unit, which is the material cost per unit. We multiply by the number of units. We multiply by the number of units. Multiply by the number of units. So for W, it's going to be the number of units, they are 10. So we will be multiplying that by the cost per unit. The cost per unit for product W is 20 shillings. It is shillings 20. This will give us 200. Then we go to product X, and product X is having also 10 units. We multiply that by the shillings per unit, which is 80, and this will give us 800 shillings. Then we go to product Y, which has 100 units. We multiply that by shillings 20, which is the cost per unit. This will give us 2,000 shillings. Then we get the 100 units, multiply by shillings 80, which is the cost per unit for product Z, and this will give us 8,000. So it is this 8,000. These are the figures, the final figures that we are going to be transferring to. These are the figures that we are going to be transferring to our costs here. How we said the product, this product W we put in the grid lines, we'll be able to see how we can be able to handle some of the things. So we have computed our cost. The material cost for product W was 2,000, and the one for X is 800, and this one is 2,000. Then the last one is 8,000. So we compute our total cost. Now this one is going to be our working two, which is going to be our labor cost. And our labor cost is also going to be the labor cost per unit, labor cost per, it is labor cost per hour. Since they have given us the number of hours, so it will be labor cost per hour we multiply by the number of hours. Number of hours. Number of hours. Number of hours used for each product. So when we do that, we are going to be able to compute for the different products. We have Y, we have X, so we have WX. This is our product X. Have our product Y and our product Z. So what we have first of all to compute is that they have given us the direct labor hours per unit, but they have not given us the number of hours. Or in fact, they have not given us the total number of hours that were used by different products. So since they have given us that to produce 1 unit, let's say for product W, we need 1 hour for only 1 unit. But remember, we are computing for the output of 10 units, because output for product W, we have 10 units. It means it will be the 1 times the 10 units. In other words, to compute our total number of hours that we are used for all the products, it will be the 1 hour per unit times the number of units to get the total number of hours that were spent on the 10 units. So this will be, can just combine it here, we get the 1, which is the direct labor hour per unit, we multiply by the number of units, which are 10 units. And this will give us 10, but these are going to be 10 hours that were spent. Then we go to product X, which will be, to produce 1 unit of product X, we need 3 hours per each unit. It means it will be that 3 hours times the number of units, which are 10. And this will give us 30 hours. This will give us 30 hours. Then we also compute for the product Y, where we say this is going to be 1 hour that is needed to produce product Y. Then we multiply by the number of units, which are 1,000. And this will give us 100 hours. These are the 100 hours that we need in total that will help us produce the product Y. So this will be the product Z, it will be the 3 hours multiplied by the number of units. And this will give us 100 hours. So since we have got the total hours that we need, we can also maybe get the totals. The totals will get the 300 hours plus the 100 hours plus the 10 hours and the 30 hours. That will give us 440 hours. Now, to produce all the units, we spent 440 hours. So what we need here is that we need to get the cost or the labor cost we've incurred, since they have given us the direct labor cost per hour, meaning for each hour they are paying us 5 shillings. It means for us to get the cost that we spent on product W, we shall get the 10 hours, we multiply by 5. And that's the unit cost, or the cost per labor hour. So this will be multiplied by 5 to be able to get our labor cost. Now it will be this labor cost that we are going to transfer to our sheet, and this is going to give us 50 shillings. Now this one is going to be in shillings because we are multiplying hours by the cost per unit. Even this one will multiply by 5. This will give us 150 shillings. Then we go to product Y, also multiply that by 5, and that will give us 500 shillings. So we go to product Y and we also multiply by 5 to be able to get the 1,500 500 shillings, meaning that's the cost that we spent. Remember here, we don't need the total. We only need this cost that we are spent on each product. So for labor hours, this one we have 50. This one we have 150, and this one we have 500. Then this one will have 1,500 shillings. So we go to the overheads. So this is where we need to be very attentive, because it's what we actually need to know. It's one of the things that is going to differentiate between the traditional and the costing system. The way we treat the overheads is what makes a difference. But the direct labor hours, sometimes they may just give you these figures, and they have already computed for those figures, but they give you for you to just put it. The only thing will be how to handle the overheads, because we said we are going to put more emphasis on the overheads than the direct costs. So these overheads, we said with the traditional costing system, we use a single OAR, the overhead absorption rate. We use a single code. In other words, we just use one item, and it is either direct labor hours, it is either labor hours, or it's going to be machine hours. That's what we said in our theoretical video that we analyzed. So this is what we are going to be following. We use the direct labor hours or the machine hours, whatever has been given the question. But if you look at the question, they have given us the direct labor hours. We are not going to use the direct labor hours per unit, but we are going to use the total direct labor hours that were spent for each product. These ones, the ones we've computed here. So for us to be able to get these overheads, go to the working three. Working three is going to be about the overheads. And we said these overheads, we use an overhead, we use OAR, overhead absorption rate. And the overhead absorption rate is always equal to the total costs, or the total overheads, total overhead costs, we divide by the budgeted, actually it is budgeted overhead cost, total budgeted overhead cost. We divide the whole of this by the whole of that by the budgeted, or it is total budgeted activity level. And in this case, we are going to use labor hours. So we first compute the total budgeted overhead costs. Actually, they have given us the total budgeted overhead cost, 3,800. That is the total. They have given us the question. And what we have to compute is the total budgeted activity level. Remember, here is what makes the difference. The total budgeted activity level we are using is for the direct labor hours. We are not using the direct labor hours per unit. We are using for the whole direct labor hour, the hours that were spent for all the products within it for each product. So the total is this 440 that we computed. So the total budgeted overhead, they are budgeted to spend 3,800, and that 3,800 inclusive, it is including all those short-term variable costs, setup costs, and expediting and scheduling cost plus the material handling. All that is inclusive. So it will be that, which is 3,800,000. We divide that by the total budgeted hours, and this will give us 70 shillings. This is going to give us 70 shillings, or we may say shillings 70 per, this is per labor hour. What this means is that whatever figure we divide, or whatever item we divide by the cost, what we divide here, the activity level becomes it's more of dividing the total cost, we divide by the number of units. By doing so, we get the cost per unit. So in this case here, we are getting, since we are dividing by the total number of hours, we are getting the shillings per labor hour, or per hour that has been spent. So our emphasis here, or what we need to know after getting the OAR, is by getting how much have we spent on each product. Because remember, product W is requiring us, for the 10 units of product W, we need 10 hours. So the question will be, how much of the overheads are we going to spend on those 10 units? It will be these 70 shillings per hour, then we multiply by the number of hours, which are 10, to be able to get the cost that we spent on that, to be able to get the cost that we spent on that product. So for product W, it's going to be the 70 shillings. Where are we getting the, actually, it's going to be the OAR, let me put it there, OAR times the number of hours used. It's going to be the number of hours used. And this number of hours we used, we said we are getting 70, that is shillings. We get shillings 70. Shillings 70 we multiply by the number of hours that were used by product A, which are 10. We are getting this 10 from here, which is the 10. And when we do so, we are going to get 700. So it is this 700 shillings that we are going to transfer here for the overhead. And that's what we call absorbing the overheads to each product, or that's what we call the allocation. So we do the same for all the products X. For the X, I'm not repeating that, but it's going to be 70, that is shillings 70. Shillings 70 we multiply by the hours. The hours were 30. So since they are 30, they are going to give us 2,100 shillings. So we go to product Y, which is going to give us shillings 700. We multiply by the number of hours, which were 100 hours, and this will give us 7,000 shillings. So we go to product Z, and product Z will be shillings 70 multiplied by the number of hours, which were 300 hours. So those 300 hours are going to give us a cost of 21,000. So that's what we are going, these are the figures that we are going to be taking to our cost sheet. This is also called a cost sheet because it shows all the costs that are incurred. It is 2100 and 7 zeros, 21 zeros. Sorry, this one was 700. Sorry. This one was 700. This one was 20. Was 2100, and this one was 7,000, and the last one is 21,000. So that's what we were required to do. So what we do here, we get the total costs. These are the whole total costs that we incurred in the production of each item. So we add all these costs up. We add from here, from materials, we add from the direct to the overheads that we incurred. This is going to give us 95,000. When you add this is 900 plus the 50. Then this one will give us 3050. This one will give us 9500. Then this one will give us 3500. But the question wanted us to get, they wanted us to allocate. They wanted us to allocate the overheads on the basis of the traditional costing. In other words, whatever we do with ABC or the traditional approach, what we are trying to look at is the cost per unit. We are not interested in defining the total cost that has been spent for each product. But what we want to know is that we want to know the total cost per unit for only one unit. And the reason for that is, for that allocation, is that we want to determine the selling price. Because when you know how much you have incurred in the production of one product, you can be able to determine, to add the markup and be able to determine the selling price. Some other questions may require you to get the profit. Of course, by get the profit it means that they have given you the selling price. Or they may not even give you the selling price and they tell you the markup or the margin, whatever they have given you. So we get here the cost per unit. That's what we are interested in, cost per unit. And to get our cost per unit, maybe we can also show a working for it, which is going to be our working for. This one, I'm just going to show the formula, how we do it, but we are not going to waste time computing that. Cost per unit, we said cost per unit is going to be the total costs we divide by the number of units. Total costs divided by the number of units. Total costs divided by the number of units. for each product. These are total costs. So we are getting this one from here. We have already our costs that we've used. These are our number of units that we are produced for each product. Maybe I can broaden this one. And this is the total costs that we've incurred in the production of all those costs. So what we need to do is, by getting this, we divide by this. So when you do that, we are getting 95 shillings. And that will be what they wanted us to do. We can maybe double underline this. To show that that's where we are ending. So that's what they wanted us to compute in a part A. Part 2 is just like the same way we've been doing. Since we are going to be continuing with the question, it is the same question. All of these, we are going to bring them like the way we've brought them, like the way we computed here. They are going to be the same. So the only thing that is going to change is this overhead, because with the ABC system, we believe that we go by each activity level, by looking at the absorption of those overheads using a suitable cost driver. So for this case, we are going to be using a cost driver. So that's where I want you to put a focus, or to put more emphasis, because that's what the basics that are needed for ABC, or that's what differentiates ABC from the traditional costing system. And we said the traditional costing system is not going to be all that examined. The tradition, what they are going to be asking all the time is going to be the ABC system. But as we said, they may give you maybe the profit. They may say that you want you to advise the company. We have given you maybe the profits that we are computed using traditional costing, but they want you to advise the company on which system to use by you applying by you adjusting the profit they got using the traditional costing when you are using the ABC system. So that's very important, because most of the questions, they are not going to be all that. They are just going to be, remember we said we are management accountants, we are offering advice. We are like advisors of the company. Most of the things they are going to be asking you to help the company to understand which one is better, or which one will help the company to achieve. So let's try to look at the part B, because part B was all about they said they wanted us to allocate. They wanted us to allocate overheads using the ABC system. ABC system. So we are going to bring the same way we've done this. It's the only thing which is going to change, we said it is going to be the overhead. We can copy this and paste it there. And you only change few items. Can copy all of that and paste them here. Just like that. Then we remove these ones, because the whole of these are going to be changing. clear that the whole of that is going to be changing. This one is going to be remaining the same. This one we are going to change the working because we need to compute it different. We stopped on working 4, so this one will be working 5. So this one is going to be coming from this working. So when you are given a question, you don't repeat again, you repeat computing this because it is a continuation. The other one is part A, this one is part B. It is the same question. What you only do, you refer these workings. You make sure that the working, these answers, you show where you got them from. You got them from the working 2. So we go to our, what we need is the overheads. Now what we are going to compute is the overheads, but when we are using ABC system. Overheads using ABC system. And we said it is also the same, we get the OAR, but this time it's going to be the budgeted overheads still, but this time it's not going to be, we are not going to use we are going to use for each item. So we can copy this one. Just the same way we had it there. It's also going to be the same. Okay, we may leave that one, but what you have to know, it is going to be the same formula. So we need to see how we can be able to do this. What we need to do, what we need to know here is that this is going to be our working 5. Forget to label that. This is working 5. So this working 5 is the one that we are going to, that is going to help us see what we actually do under the ABC system. So these overheads that we are seeing here, we are going to get working for each of them. Remember they were 1, 2, 3, 4, 5. They were 5. Short run variable costs, setup costs, expediting and scheduling, material handling. Those are the ones. The difference here is that we are not taking the total cost as a whole, but we are splitting each overhead to be allocated using an appropriate cost driver. So this working 5 is going to bring for us all the costs, where we are going to be looking at the short run variable costs. Let me write them in capital letters so that we see the difference. Variable costs. This one is going to create its own working. We can say it's going to be working 6. You can just put maybe 6. Then we have the setup costs. Setup costs, it's going to be working 7. Then we also go to expediting and scheduling. This is going to be our working 8. Then we go to the material handling. And this material handling is going to be our working 9. And there we shall get the total cost. Total costs. Then we also get the cost per unit. Cost per unit. And this cost per unit is going to be coming using the same formula like the way we did in working 4. So when we compute all of these, that's what we will see that will be the difference so we start by looking at working 6. Working 6 is going to be our short run variable costs. These variable costs, we are going to be using the total budgeted overheads. But for short-run variable costs, we are going to be using the activity level that's going to be suitable for that. When you check the question, we were given the number of production runs. We have material cost per unit. Those ones we call them the direct costs. So the only cost driver they gave us was the number of production runs, and we had the number of units. So what you have to know with these short run variable costs, the cost driver, what we need to first identify is the cost driver. Before we do anything, the cost driver, and the cost driver is going to be the labor hours. Because when this short run variable cost, it means when you have just started working. These are variable costs. The only variable cost that we have material and the direct labor. But when you have just started working, the only thing you are going to be using is going to be labor, because these are short term. You have just started working. The only thing you need is going to be the labor, or the workers, or the employees. If you had given the number of employees, it would have been on that. But the short-term variable costs are going to be as per the labor hours. So our cost driver is going to be labor hours. So after identifying the labor hours, the next step we'll do is to get the OAR. And to get the OAR, it is going to be the budgeted, or the total budgeted overheads overhead costs for the short run variable costs. Then we divide this by the total budgeted. We divide this by the total budgeted labor hours. And the total budgeted labor hours, we computed them. So the budgeted overheads or budgeted total overheads or the total budgeted overhead for the short run is going to be, or they had given us as 30/80. It is 30/80. So we get that 30/80, we divide that by the total number of labor hours, which we are 440. And this will give us 7 shillings. It will be 7 shillings per labor hour. Per labor hour. This is going to be 7 shillings per labor hour. So for us to get what we've spent for all the products, we are going to get the 7 shillings and we multiply that by the number of hours. Remember, the number of hours, we computed them from up here. They are here for product W. They are 10. So, sorry, this one is supposed to be product W, which will be, first of all, push that one, which are 10 labor hours. This will give us 70 shillings. This will give us 70 shillings. So for the product X, it's going to be shillings 7,000, 7 shillings multiplied by the number of hours. Number of hours are 30. So we will get 210. So let me also add here shillings so that for those watching can be able to recall what we are doing. Then for product Y is going to be 7 shilling, which is this one, the labor hour, multiplied by the number of hours, which is going to give us 700 shillings. So for product Z, it is going to be our shillings 7 per hour, multiply by the number of hours, which are 300 hours, and this will give us 1,100. So it is these are the figures that we are going to be taking up. So you are seeing the difference. The other side, we took all the overheads and we divided by one cost driver, which was the number of labor hours. But this one we get individual cost, we divide by its corresponding cost driver. So this one is going to be 70. This one is 1 to 10. This is 700. And this is 2,100. Then we go to go to number 7, which is going to be number 7, which is the setup costs. What we first of all do is the cost driver. We said the cost driver for this is going to be the number of production. If we had the number of setups, it would have been the number of setups. But this one, the cost driver is going to be number production run. So having gotten the number of production runs, then what the second item is to get the total cost driver. Just like the way we got the total number of overheads, the total number of labor hours that were used, it is the same way we are getting them here. We get the total, which is going to be, if you check the question, they have given us the number of production runs. This number of production runs, they are not per unit. If I thought they were per unit, we would have multiplied. We first multiply the number of production runs by the number of units. But since what we are given is not per unit, we take it the way it is. So it would have been 2 plus the 2 plus the 5 and plus the 5. And this will give us, that's 14. And this 14, that's the total number of production runs. There were 14. So it will be the budgeted cost. Now the third step is to get the OAR. We said the OAR, I'm not going to repeat the formula. We said the OAR of the individual cost, and the individual cost for the setup cost was 10,920. We divided that by 14, and this will give us 780 shillings. Sorry, this is 780. This is shillings. 780 per production run, because we divided by the number of production run per production. Permit me to use PDN to mean production run. Let me production run. In other words, if we want to now, when you have got the OAR, the next step is to allocate each product with the required or with the related cost of that setup. So it will be the OAR times the number of units. So to get the one for product W, it is going to be the OAR, which is the 780 times the number of units. This is going to be multiply by the number of units. No, sorry, number of production run, not units. It's supposed to be production run, because the cost is this one, the 780 is per production run. It means for product W we spent only two production, we had 2 production runs. So it means it will be 2 times the cost per production run. Cost of number of production run. and this will give us 2. Those are the number of production runs that we had for product W, multiplied by 780, and this will give us 1560. And it will be that 1560 that we shall take to our table. So we go to product X. I'm not going to repeat what I did, but it will be the same. It will be the OAR, which is 780. We multiply this by the number of production run, which were 2. So it will give us the same answer, which is 1560. Then we go to product Y, which is going to be the OAR, which is 780. We multiply by the number of production run, which are 5. This will give us 3900. 3900. Even for product Z, it's going to be the 780 multiply by 5, which will give us same answer, which is 3900. So it is these figures that we are taking for the setup costs. So we come to our setup costs. Setup costs here, and we pick the value, which is 1560. The next one is also 1560. The next one is 3900. Then the last one is 3900. Then we go to the production, to working number 8. And our working number 8, is all about the expediting and scheduling. We said the first step is to get the cost driver. These are the steps that we spoke about. And the cost driver here is also going to be number of production runs, because that's the only thing that we have for scheduling. But we said to determine this, you will always use judgment. You see the best or the appropriate cost driver, it's the one that we use. Number of production run, we had already gotten. The second step would be to get the total cost driver. But since we had got it, since it is the same number of production runs, we had got it. What will only go to compute the OAR as our third step. And the OAR will be that cost for the expediting and scheduling, which is 9100. We divide by the 14, which are the total number of production runs. And what we get there is going to be our cost per production run. And that will give us 650. That is shillings. I use that symbol to mean shillings per production run. So we repeat the same thing to get for each product. We said it is going to be the OAR. OAR we multiply by the number of production run. Number of production run that we are used in that product. Number of production run. Permit me to use PDN to mean production run. So this will give us 650. We multiply by the 650 will multiply by 2, which are the number of production run that were used in product W. And that will give us 1,300. We go to product X. Product X, it will be the same OAR, which is 650. We multiply by 2, which is the number of production run. And this will give us 1,300. We go to product Y, and this will give us, it will be, sorry, this product Y will be the OAR, which is 650, we multiply by the number of production run, which are 5. So we get the total, get the outcome as 3250. So we go to the last product, which is product Z, which will be equaling to the OAR, which is 650. We multiply by the number of production run, which are 5, and this will give us 3250. So it is these figures that we are going to be carrying to our cost sheet for expediting and scheduling, which is 1,300. Even this one is 1,300. This one is 3250, and this one is 3250. We do the same for 9, and we finalize. Maybe we can do the number 9 from here. We can do the number 9, so that we minimize the space. Number 9 is going to be the material handling. We said the first thing you look at is the cost driver. What brings that cost? It's what we call the cost driver. For those who don't understand what a cost driver is, we explained that in the previous video. Make sure you go and watch. The video is named Traditional Costing versus ABC. That's where we explained everything. You will be able to understand. By the time you do this number, you will be able to pick all the concept, because this is more like an introductory part, what we do in cost accounting, cost and management accounting. So we said the cost driver, the only cost driver that they had given us is the number of production runs. It's also going to be our cost driver here. Number of production run. The second thing we said we do, or the second step, is to get the total cost driver. But since we had got it, the thing we are going to do, we are going to look at, is getting the OAR as the next step. The OAR will be the budgeted cost. For material handling, we are budgeted for 7700, which is 7,700 shillings. We divide that by 14, which is our total number of production run, and this will give us 550. This is shillings per production run. So what we do next from here is we allocate the cost to the different products. For product W, it will be the OAR. We multiply that by the number of production run used. Number of production run used. And for that product W, it will be the OAR, which is 550. Multiply that by 2, which are number of production runs. And this will give us 11,100. So it is 1100. So we go to product X. Still, it will be the OAR, which is 550. We multiply that by the number of production run, which is 2. This will give us 110. Then we go to product Y, which is going to be the OAR, which is 550. We multiply by the number of production run, which are 5, and this will give us 2750. We do the product Z, which is the OAR, multiply by the number of production run, and this will give us 2750. So it is these figures that we are transferring to our cost sheet, which is 1100. Even this one is 1100. This one is going to be 2750. And this one is also 2750. So we add all that and we get the total cost. So we add all that and we get 4280. We add from this. You can say equal sign. Equal sign, you put a sum. We are summing from this. So you can so those are the costs that we got. This one we have to add even these ones. So that's it. That's it that we wanted to know from that. That's it that we wanted to know. After getting the total cost, we can now divide this total cost. We can divide this total cost, we divide by this one, we divide by the number of units, which are 10, to get the cost per unit. So we can get even the costs per unit here, and that's going to be the thing they wanted us to compute. So that's all about the ABC system and the traditional costing. But just like the Y said, some of the things they are going to ask for advice. Most of the times they're asking for advice. So maybe I can remove the grid lines. and you'll be able to see everything clearly. So most of the times they are going to be asking for advice. And what we need to do here is that we need to look at a question that is going to help us appreciate the advisory part that we may look at. And that's going to be from March 2021, question 2A. That's the question we are going to look at in the next video. That is going to help us understand how we can be able to advise when you have been given the profit from the traditional cost, and they want us to use the ABC system to make sure that we compute and advise on which one the company can undertake. But most of the times we already use the ABC system because it's what mainly the examiner is going to be asking. So that's all for today. Until we meet again, maybe for those who haven't subscribed, please make sure you do, because what we are going to be discussing is we're starting from the starting point until we finish the syllabus. This is a foundation that is going to help us pass some of these hard concepts with ease. So thank you for watching. Until we meet again. It's bye for now.